Welcome back. I'm Pratap here. Let us analyze the performance of high liquidity zones on 6th June 2024, and many high liquidity zones are identified on this day. So before we get into this analysis, a small announcement please. If this is your first visit to our channel, please understand we are providing complete free training on supply demand zone price action. All the training lessons are available at our NeoStock YouTube channel. So at our homepage, click on this community tab. You will get access to this post. This post is having a YouTube playlist link that will take you to the training videos. You just click on this YouTube link, then you will get into the playlist Supply Demand Zone Price Action course. Here you have all the training lessons are available. You just need to scroll down to the bottom of the page. Here, starting from lesson 1.1, all the training lessons are available in an order. So please go through all these lessons one by one and strengthen your skills related to supply demand zone price action. I have also provided the link to our Telegram channel in this YouTube video description. So please join in the channel. It will be helpful to you. Each time when we release a new YouTube video or any other important updates, we will provide at our Telegram channel. Now let's get into the analysis discussion. Before that, let us identify the high liquidity zones generated on this day. So high liquidity is generated on 5th, that is the end of the day, but we are executing in the live market on 6th. So we don't have any daily high liquidity demand zones. And these are the high liquidity stocks near daily supply zone. So we have high liquidity supply zones are available here. See, Biocon is there, Chambal Fertilizers, Deepak Nitrate, many high liquidity zones. Dr. Reddy Labs, Exide Industries, Maruti, Pidilite Industries, and Tata Steel, many high liquidity zones. And also this is going to be a very good exercise because we already learned when a zone will be violated. We have identified several zones, they will be violated because many of the people doesn't know this technique. I already explained this concept in lesson 16, when a zone will be violated. So that's why we are in a position to identify when a zone will be violated. And remaining zones, obviously we get good trades. And this is 75 minutes demand zone, stocks near 70. Here we have only one, Sun TV. This is a 75 minutes high liquidity demand zone. Then again supply zones, 75 minutes supply zones. Let us identify high liquidity supply zone. First one is indices, we will leave it. We have Atul is there, 75 minutes high liquidity supply zone. And Bata India we don't take it, it is a pierced zone, so we don't trade. And MRF is there. Ramco Cement is there. SBI Card is a high liquidity zone. Tata Chemical is a high liquidity zone. Tata Steel, observe, Tata Steel is there in the daily zone as well as the 75 minute zone. Interesting, right? Okay. So these many high liquidity zones are identified. Let us look into one of these things, each of these stocks, how we fine tune. So the first one is MRF, we got a good trade. Those stocks we got trades. First I am explaining. After that, let us look into the remaining stocks. This is a 75 minutes high liquidity supply zone. This is a lagging candle because here there is a gap. You will be getting a hidden body. So it is a drop, base, drop. And this 75 minutes high liquidity zone we fine tuned with 15 minutes time frame. Here we have a drop, 1, 2, 3, 4 base candles and a drop candle and a follow through candle. This is not a great leg out, I agree, but okay, it is valid. Completely came out of the zone and then excellent follow through candle. So inside, is there any 5 minute zone? That we need to identify. Always make sure the 5 minutes is inside the 75 minute zone, not outside the 75. This is just overlapped. See, inside again we have fine-tuned 5 minute zone. We have a drop, 1, 2, 3 base candles and again a drop candle. This is a medium size candle, but okay, it is part of the zone. But this zone is inside the 15 minute zone and also it is inside the 75 minute zone. So it is a valid. So we didn't fine tune outside. Because outside the high liquidity zone area, the fine tuned zones, we won't bother about that. Always the fine tuned zone should be there inside 75 minutes. Or worst case, it should overlap with 75 minute zone. But anyway, it is there inside. No issues with this fine tuned zone. So before prices are entering into that, we have identified 15 minutes demand zone. So we have a rally, 2 base candles and a rally. This is the 15 minute zone. This is only a target zone. See here in the next trading day, morning 9:15 candle, prices entered into this zone. We got an entry. After that, prices came down. And finally, it reached the target. It's a very long journey on this day. When it reached the target at 15:15, almost at the closing hours of the market, maybe 15 minutes before the closing hours of the market, it reached the target. I'm sure some of you might have exited before itself, before reaching. But for me, how high liquidity zone is executing, performing is more important. It's not about how much return you got or I got. It's not about where you exited or I exited. But ultimately it reached the target by end of the, before closing the market. And this is the way MRF, how much opportunity it has given. How much you took is different. But how much opportunity our high liquidity zone is given, that is more important. That too, all these trades are during the elections declaration week. The volatility in the market is very high. You know, it's a coalition government. Government is yet to confirm. There were a lot of discussions are happening within the NDA parties. That means a lot of uncertainty in the market during these days. Even then, our high liquidity zones, how they are performing is very important. In the previous video you have seen, we got an excellent trade. Again in this video we have seen. 4th was elections declared. 5th we got a trade, good trade. And 6th today, again, we are getting a very good trades. And MRF has given a profit 12,747 rupees profit as per one futures lot, and which is 11.4% ROI as per one futures margin cost. Based on one futures margin cost, I am calculating this ROI. 11.4%, excellent. So the next one is Sun TV. This is again a 75 minutes high liquidity zone. We have a rally, we have 3 base candles and again a rally candle. This 75 minutes we need to fine tune with 15 minutes. We have a rally, base rally is there. 2 base candles and rally candle. This again we need to fine tune with 5 minutes time frame. Very interesting here. See, we identified 2 order flows. We have a rally candle, 2 base candles and a rally candle. Again we have this rally, base rally. So within the same 15 minutes we have 2 order flows are there. It is a very interesting scenario. When you have 2 order flows, which order flow you have to believe? That you cannot tell. You know, sometimes what will happen? Prices will come and this order flow will push the prices and again it will go and reach the target. At the time you won't get a trade in this. Some other times the first one will be violated. Maybe the supply is very strong, the first one will be violated. Before the violation, this demand zone will consume majority of the supply, and supply will be weakened by the time it reaches to the next demand zone. Maybe your first one will be stopped out, second one again you will get the trade. That's why what some people will do, they will take a trade on the first one. If it fails again, they take the trade on the second one. Some people who wants to take less risk, they will anticipate the first one should be violated, and then only they want to take the trade on the second one. Sometimes if they miss the trade, it is okay for them. That's why it is all up to you how you plan your trade. But what happened once the market is started? So here we got an entry in this zone, first zone. And moreover, the target is also, this is the target, revised target. The reason is we have a drop, base, a drop is there. By the time it entered, we got the entry, and also target is going to be this. Okay, we got the entry. What happened next? So this is the 5 minutes time frame. So we got the entry. Next candle, this 5-minute zone is violated. Because the 5-minute zone is violated, the first 5-minute zone, fine-tuned 5-minute zone, we got a loss. 2,175 rupees loss, which is equivalent to 0.64% negative ROI as per one futures margin cost. So this is anyway within our risk accepted limit. It is okay for us. And next again prices came and entered into the zone and picked up the orders. We got the second trade opportunity. Definitely you should not miss, because earlier trade would have consumed majority of the supply. Now supply definitely it would have weakened, and now demand will dominate. Definitely it will take you up to this 15 minutes target zone. So we got the second entry. From the second fine-tuned demand zone, we got the entry, and after that it reached the target in next 2 candles. That means within 15 minutes the entire trade is completed. The second fine-tuned zone. The first candle we got the entry, first 5 minutes candle. Next 5 minutes, the third 5 minutes. That means third 5 minutes it reached the target. That way within 15 minutes the trade is completed. So how much Sun TV has given profit for our second trade? And it has given 15,750 rupees profit, which is 4.6% ROI. Profit is very big. Why ROI is very small? You might be wondering. The reason is the margin cost is very high for Sun TV. It's around 3,40,000 rupees margin cost is there. So that is the reason why your ROI is reduced to 4.6. It is less than your average ROI 6%. Still 4.6% is a good ROI. So this is about Sun TV. And finally, after market closed, once again from the supply zone prices came, and this second fine-tuned demand zone is also violated. And this was the situation at the time of market closing on 6th January. Okay, now what about the next one? Biocon. So this is a drop, base drop. And we have 75 minutes fine-tuned zone, drop, base drop. And a 15-minute structure, see, it's a very bad structure. When you have zone, such kind of fine-tuned zones, easily the zone will be violated. See, the next, once the trading is started, the zone is violated easily. We already predicted, because we already identified the concept when a zone will be violated. This is the way we are avoiding all these kind of trades. Because today is a very good example for all those people who wants more examples for when a zone will be violated. This is a very good video. Many zones are violated today, but we identified all the zones. Next one is Chambal fertilizers. This is also a high liquidity zone. We have a rally 1, 2, 3, 4, 5, 6 candles and then drop candle. Actually, it is not like this. Software identified rally 1, 2, 3, 4 base candles. This is the leg out it identified. So this is good enough to consider the leg out, because you are seeing a very big large candle during the elections results day. All these candles are looking small, but if you hide this candle, definitely you experience this is a big candle. Okay, anyway, now how we are going to fine tune? Here we identified a rally, 3 base candles and a drop candle. So we have a 75 minutes fine tuned zone. Again we need to fine tune this 75 minutes with 15 minutes time frame. See the 15 minute zone? The structure is very bad. It is not having proper price structure. So definitely this zone will be violated. We are predicting this zone will be violated. See what happened once the market is opened. Prices came, somewhere it entered here, didn't violate. Maybe there could be other reasons. Here maybe institutions might have created a new zone rally, 3 base candles and drop. But still this structure is not a satisfactory structure. But some price action took place, that's why the zone is not violated. Definitely this zone will be violated in the coming days, no doubt in that, because the price structure is not good. Okay, Deepak nitrate, next one is, this is a daily high liquidity supply zone. We have a drop, 1, 2, 3, 4 base candles and a leg out candle. This we need to fine tune with 75 minutes. We have identified 275 order flows. One is a rally base drop and another one is a drop, 2 base candles drop. And a 15 minutes time frame. This structure is not at all good, because it is a ERC candle, again a drop candle, in between there is no base candle. So it's not a valid zone, it will be violated easily. But here we have a drop, 1, 2, 3, 4, 5, 6 base candles is allowed, and then a drop candle. This is at 15 minutes time frame. Now look into the 5 minutes time frame. This is a ERC candle. This is another ERC candle, drop candle. In between no base candles. So the price structure is not good. There is no proper institutional order flow. So that's why this zone will be violated easily. So at the time of market closing, this is the price structure. See the price structure, the zone is pierced easily, and the momentum is within this area on the whole day. But anyway, we didn't plan any trade here, because we know this zone will be violated. Next one is a Dr. Reddy Lab. This is a rally base drop. This is the high liquidity zone daily. And this one we fine tuned with 75 minutes. So we have a rally, 3 base candles and a drop. And again we fine tuned with 15 minutes time frame. We have a rally, 3 base candles and a drop candle. And we need to fine tune with 5 minutes time frame. And look into the 5 minute structure. This is not at all a good structure. Have a rally, base candle, 1, 2, 3, 4, 5, 6, 7, medium size candle. So definitely the structure is not good, 5 minute structure, and we know this zone will be violated. So we don't plan any trade in this zone. And anyway, prices did not enter into this zone. But definitely in the following days, this zone will be violated. But on this particular day, prices are just only once it just touched, but not went up. Okay. Next one is Exide Industries. This is a rally, 2 base candles and a drop candle. This we fine tuned with 75 minutes time frame. We have a drop, 4 base candles and a drop. And in 15 minutes time frame, look into the price structure. Very bad price structure. Such kind of zones will be violated, so we don't plan any trade on this particular stock. See what happened next day? The zones are violated easily. This is the first 15 minutes candle, 9:15. This is the 9:30 candle. Within first 2 candles itself, the complete zone is violated. So we know, we already learned when a zone will be violated. Now you should feel proud. The concepts you learned, how it is helping you not to plan any trades in these zones. Next one is Maruti. We have a rally, 1, 2, 3, 4, 5 base candles and a drop candle, this one. And see the 75 minute structure, it is not at all a good structure. Very bad structure, definitely this zone will be violated. So the next day market, this is the price action, 70. Prices closed inside this, probably in the following days maybe this zone will be violated, but anyway we didn't plan any trade on this particular stock. Next one is PI Industries. See, in Pidilite Industries we have a rally, 3 base candles and a drop candle. This is a daily zone. We fine tuned with 75 minutes time frame. And this 75 minutes time frame again fine tuned with 15 minutes. We have a rally, ERC candle, 2 base candles and a drop candle. And within this 15 minutes we planned, see inside the zone we planned a rally, 2 base candles and a drop and a follow through candles. This is the fine tuned zone. But unfortunately prices did not enter into this fine tuned area on this particular day, so we didn't get a trade. Next one is a Tata Steel. Tata Steel, very interesting. You have seen Tata Steel in daily supply zone as well as 75 minutes also. Both are high liquidity zones. We have a drop, 2 base candles and again a drop with the gap. And this zone is already tested, came down. Let us fine tune with 75 minutes, but that 75 is also high liquidity. So this is the 75 minute zone. This is a rally candle at the hidden body. A rally candle, 1, 2, 3, 4 base candles and a drop candle. This is a 75 minutes high liquidity zone. Daily is high liquidity and also the fine tuned 75 minutes also high liquidity. And this 75 minutes again we fine tuned with rally, 3 base candles and a drop. And this fine tuned 15 minute zone we want to plan 5 minutes, but see the price structure. This 5 minutes price structure is not at all good. It is a very bad structure and such kind of zone will be easily violated. So that means both 75 minutes high liquidity zone and daily high liquidity zone will be violated. Let us see what happened to the market. That day once market is entered, prices it picked up the orders and again came down. There was some prices, it is a holding. This particular 15 minute zone is holding the prices. But anyway, we didn't plan a trade because we didn't have a proper fine tuned 5 minute structure. Sometimes you may see such kind of price action, but we have to stick very strict about our rules. Why prices are coming from here? There could be other reasons. definitely we should have a fine-tuned 5-minute zone to plan our trades. Maybe these opportunities we might have missed, but we can't take deviation from. Because once in a while you see, because of this once in a while such kind of price action happening, if you start taking trade in all the zones, see what happened, how many zones are already violated. We have seen so many zones violated so far. Anyway, we didn't plan a trade, but I am just showing you what happened to the market on this day. Actually, there are reasons why this kind of price action. Here you see rally, base, drop. Just overlapped slightly from here, and these orders are again pushed the market down. And once again from here it pushed. Maybe this could be a high liquidity. Rally, base, drop could be a high liquidity zone, 5 minutes level. Maybe that could be the reason. During the live market, institutions might have created this kind of price action. Exactly here at the distal line of this zone only, they are all picking the orders. Anyway, we didn't plan a trade. Let's leave this. Next one is Atul. This is a 75 minutes high liquidity supply zone. We have a rally, base, a drop. And here we have a 15-minute zone. We have a rally, 1, 2, 3, 4 base candles, a drop. It again picked up the orders from here. If you look into the fine-tuned 5-minute zone, we have a leg candle, ERC candle. This can be considered as a leg. 1, 2, 3, 4, 5 base candles and a drop candle. So this is a good fine-tuned zone, but already this zone is tested. Because it is tested, we can't plan a trade. We know that this zone will be violated because there is no fresh. At least it should be high liquidity. We don't have any signs to confirm it is a high liquidity. There is no new zones are created from here. But anyway, on this day, prices did not enter into this zone. And also we did not plan any trade also. Next one is Ramco 75 minutes high liquidity zone. So this is a rally, base and drop. And if you look into the 15 minutes area, the fine-tuned area is not good. The price structure is not good. Such kind of price structure zones will be violated easily. So we don't have any trade plan on this zone. Let us see what happened on the next on this trading session after this. See today what happened? At 10:30 candle, 15 minutes candle, this zone is violated. Next one is the SBI card. We have a rally, base, a drop. ERC candle is valid because the complete body is outside and you can add some hidden body here. But anyway, this is a valid leg out candle. But this price structure is not good in 15 minutes. Because there is a bad price structure in 15 minutes, this zone will be violated. So today what happened? Prices were moving here. There is no institutional action, price action, but at the end, the last candle, this zone is violated. See, it is pierced here. Once it is pierced, the zone is violated. It is not valid for trading purpose. Next one is a Tata Chemical. We have a ERC candle. You can add the hidden body. So rally, we have 4 base candles and a drop candle. And here we identified a 15-minute zone. We have a rally, 2 base candles and a drop. And within this fine-tuned 5-minute zone is also there. We have a rally, 1, 2, 3, 4, 5, 6. 6 base candles are valid. And then you have a very good leg out structure is there. This is the fine-tuned 5-minute zone. But this is already tested here. So almost it is actually it is not pierced, just touched the distal line. Not much movement, but anyway, we didn't plan any trade. The reason maybe it could be high liquidity, still why we didn't plan is a new zone creation we didn't see here. So that could be the reason why we didn't plan. If any rally based drop is there, in this fine-tuned area only, but not the newly created one, because this is the source, main source, definitely we would have planned a trade. But we haven't seen any such kind of, this is the zone created, after that there is no price action for the new zones creation. See, after the drop, all these base candles. So that's why we didn't plan any trade here. Maybe some of you may feel at least we would have got some profit here, but we cannot plan unless there is a very strong confirmation. So this is about all the high liquidity zones. So many zones are there, so many violations took place, many of the violations, all these violations we identified. Hope this information will be useful to you. Let us all meet again in our next video. Thank you.